Investing. What's the big deal? Investing is simply putting your money to work for you. Instead of letting your money sit idle, you're buying something that has the potential to increase in value over time. This could be a piece of a company, like stock, lending money to the government or a company, which are bonds, or even a piece of property, like real estate. The goal is to watch your money grow, helping you achieve your financial dreams. Investing is about more than just getting rich quick. It's a long-term strategy for building wealth and securing your financial future. Think of it as planting a seed that grows into a mighty tree over time. The sooner you plant that seed, the more time it has to grow. Investing might seem complicated at first, but it doesn't have to be. With a little knowledge and guidance, anyone can become an investor and watch their money grow. Remember, even small steps can lead to big results when it comes to investing. So, are you ready to take control of your finances and start building a brighter future? Let's dive in. You work hard for your money, right? But did you know that if you just keep your money in a savings account, it could be losing value over time? That's because of something called inflation. Inflation is the general rise in prices over time. Think about how much a loaf of bread cost 10 years ago compared to today. That's inflation at work. When prices go up, your money buys less. This is where investing comes in. By investing your money, you give it the potential to grow at a rate that outpaces inflation. This means your money is not only keeping up with rising prices, but ideally growing even more. Investing helps you build wealth and achieve your financial goals. It allows you to live the life you want and secure your future. So, don't let inflation erode your hard-earned money. Start investing today and watch your money work harder for you. Let's explore the tools to grow your wealth. These are like ingredients in a recipe. Stocks. Buy a piece of a company. If the company does well, your stock's value rises. Bonds. Loans to companies or the government. They pay back with interest. Mutual funds. A basket of stocks or bonds. Invest in various assets with one purchase. ETFs. Traded like stocks. Hold a basket of assets. Real estate. Buy, hold, or rent property for profit. Think houses, apartments, or land. Cryptocurrency. Digital money using cryptography. Bitcoin is a popular example. Every investment has its own risk and return. More on that in the next section. One of the most important concepts to understand in investing is the relationship between risk and reward. Simply put, the higher the potential reward, the higher the risk involved. Imagine a seesaw. On one side, you have potential profits or reward, and on the other side, you have the possibility of losing money or risk. Lower risk investments like bonds generally offer lower but more stable returns. Higher risk investments like stocks have the potential for higher returns, but also come with a greater chance of losing money. The key is to find the right balance for you. This depends on your individual goals, how long you plan to invest, which is your time horizon, and your comfort level with risk. Remember, never invest in something you don't understand. Do your research, ask questions, and start with investments that align with your risk tolerance. Section 5. Ready, set, invest. A step-by-step guide. Ready to start your investing journey? Follow these simple steps. First, set financial goals. What are you saving for? A down payment on a house? Retirement? Knowing your goals will help you stay motivated and choose the right investments. Next, create a budget. Track your income and expenses to see where your money is going. This will help you free up funds for investing. Then choose an investment platform. There are many platforms available, like online brokerages or robo-advisors. Do your research and choose one that meets your needs. Start small. You don't need a lot of money to start investing. Many platforms allow you to begin with small amounts. And finally, never stop learning. The world of investing is constantly changing. Stay informed by reading books, articles, and attending webinars. Remember, investing is a marathon, not a sprint. Start small, be patient, and stay committed to your financial goals. Section 6. The magic of compound interest. Watch your money grow. Compound interest is like magic for your money. It's the principle of earning interest on your initial investment plus any accumulated interest. In simpler words, it's interest on interest. And let's say you invest $1,000 and earn a 7% annual return. After the first year, you'll have $1,070. But here's the exciting part. In the second year, you'll earn interest not just on the original $1,000, but on the $1,070. As you can see, the earlier you start investing, the more time your money has to compound and grow exponentially. Even small amounts invested consistently over time can lead to significant wealth accumulation. Section 7. Investing wisdom. Tips for newbies. Here are some golden nuggets of wisdom for new investors. Start early. Time is your greatest ally in investing. The sooner you start, the more you benefit from compound interest. Be consistent. Investing regularly, even with small amounts, is more effective than investing a large sum once in a while. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different asset classes to manage risk. Remember, investing is not about getting rich quickly. It's about making smart, informed decisions and letting your money work for you over the long term. Section 8. Remember, slow and steady wins the race. Investing can be exciting, but it's important to stay grounded and avoid common pitfalls. Here are some things to keep in mind. Don't panic. Sell. The market goes up and down. Don't make rash decisions based on short-term fluctuations. Avoid emotional investing. Make rational decisions based on your financial goals and risk tolerance, not on your feelings. Seek professional advice. If you're ever unsure, consult with a financial advisor who can provide personalized guidance. Remember, investing is a marathon, not a sprint. Stay focused on your long-term goals. Be patient, and don't be afraid to ask for help along the way. Section 9. The future is bright. Start investing today. Congratulations. You've taken the first step towards securing your financial future by learning about investing. Now it's time to put that knowledge into action. Remember, you don't need to be a financial expert to start investing. With the right tools and resources, anyone can become an investor and watch their money grow. Start small, be consistent, and never stop learning. The journey to financial freedom starts with a single step. Take that step today and start investing in your future.